Module 3, Alternative and Modern Funding Sources. 1. Crowdfunding. Crowdfunding is the practice of raising small amounts of money from a large number of individuals, typically via online platforms. Types of crowdfunding: reward-based. Backers receive products, perks, or services in exchange for support. Equity-based. Investors receive shares or ownership stakes in the business. Donation-based. Funds are contributed without expectation of return, often for social or community projects. Advantages: access to a large pool of capital, quickly market validation and customer engagement, minimal dependency on traditional financial institutions. Challenges: marketing-intensive process, regulatory compliance for equity-based campaigns, pressure to deliver promised rewards or returns. 2. Peer-to-peer, P2P. Lending. Peer-to-peer lending connects borrowers directly with individual lenders through digital platforms, bypassing traditional banks. Mechanics: online platforms facilitate loan agreements, set interest rates, and manage repayment schedules. Advantages: faster access to funds, often lower interest rates, and less stringent collateral requirements. Challenges: limited loan size, platform fees, and borrower creditworthiness evaluation. This source is ideal for small and medium enterprises seeking flexible debt financing without traditional banking restrictions. 3. Revenue-based financing. Revenue-based financing allows investors to provide capital in exchange for a percentage of the company's revenue until the investment is repaid. Mechanics: payments fluctuate based on revenue performance, aligning investor returns with business success. Advantages: flexible repayment structure, no equity dilution, and reduced financial pressure during low revenue periods. Challenges: potential for high total repayment if revenue grows rapidly, limited availability, and investor scrutiny. This approach is particularly suited for recurring revenue businesses and fast-scaling startups. 4. Tokenized funding, ICOs and STOs. Blockchain technology has enabled businesses to raise capital via digital tokens, initial coin offerings, ICOs, fundraising by selling digital tokens to investors, often in exchange for cryptocurrency, security token offerings, STOs. Tokens represent a financial stake in the company with regulatory compliance for securities. Advantages: access to a global pool of investors, rapid capital raising, and innovative financing structure. Challenges: regulatory complexity, high volatility, reputational risk, and potential legal disputes. This method is primarily relevant for technology startups and fintech ventures exploring global investor engagement. 5. Strategic partnerships and corporate investments. Businesses can secure funding through alliances with established corporations or strategic partners. Mechanics: partners provide capital in exchange for strategic alignment, market access, supply chain integration, or joint ventures. Advantages: capital infusion coupled with operational support, credibility, and network access. Challenges: shared control, alignment of business objectives, and potential dependency on partner influence. Strategic partnerships are increasingly important in high-growth industries where market entry and credibility are crucial. 6. Comparative analysis of alternative funding sources. Module 3 provides a holistic comparison of alternative funding sources based on accessibility and speed of capital, cost of capital, and financial implications, ownership and control considerations, risk exposure and investor engagement requirements, suitability for business stage and industry type. This comparative framework enables you to develop hybrid funding strategies, combining traditional and modern sources to optimize growth and risk management. 7. Strategic considerations for alternative funding. Successful utilization of alternative funding sources requires due diligence, understanding legal, regulatory, and platform-specific requirements, investor communication, transparent reporting and engagement to build credibility, financial planning, accurate revenue projections, repayment capacity, and ROI assessment. Marketing and positioning. Effective campaigns to attract investors, especially for crowdfunding or tokenized funding. You will understand that strategic planning, compliance, and operational readiness are critical to leveraging these modern sources effectively. 5. Strategic partnerships and corporate investments businesses can secure funding through alliances with established corporations or strategic partners. Mechanics. Partners provide capital in exchange for strategic alignment, market access, supply chain integration, or joint ventures. Advantages: capital infusion coupled with operational support, credibility, and network access. Challenges: shared control, alignment of business objectives, and potential dependency on partner influence. Strategic partnerships are increasingly important in high-growth industries where market entry and credibility are crucial.